People who still haven't filed an income tax return yet for assessment year 2025 to 26 can still do so without paying any fine, as the income tax department has extended the deadline by one more day till Tuesday, September 16. Earlier, the deadline for filing the ITR without any fine was Monday, that was 15 September. But what happens if you still miss the ITR deadline? I am Inderjeet Kaur. In this video, I'll explain the steps to follow if you miss the deadline. Missing the income tax return deadline doesn't mean you can't file anymore, but it does come with some downsides. Here are some key consequences. There could be late fee for the assessment year 2025-2026. Taxpayers with income up to rupees 5 lakh will have to pay a penalty of rupees 1,000 if they file after the due date but before December 31. If your income is more than rupees 5 lakh, the penalty rises to rupees 5,000 under the same condition. This late fee is charged at the time of filing your belated return. If you still have tax liability pending, either because you filed late or didn't pay advance tax on time, you will also need to pay interest at 1% per month. One major drawback of filing late is that you lose the ability to carry forward certain losses like businesses losses or capital losses to offset future income. This means you miss the chance to reduce your tax burden in the years ahead. The only exception is losses from house property, which can still be carried forward even if you file late. If you're eligible for a refund, filing late will slow things down. You also lose part of the interest you could have earned on your refund. For instance, if your refund is rupees 50,000 and you filed on time, you would earn interest of rupees 2,250 for the period April-December at a rate of 0.5% per month. But if you file in October, instead, the interest drops to rupees 500 for October-December, a loss of rupees 1,750. Missing the deadline could also put you under scanner. Non-compliance often invites notices, tighter checks from the income tax department, increasing the chances of your return being picked up for scrutiny. And if you fail to file your ITR by September 16th, you can take certain steps to minimize your losses and improve your financial standing. You must prepare and submit a belated return as soon as possible before December 31 of the assessment year, as doing so limits how many extra months you lose for refund interest and keeps your record cleaner. And in case of regular ITR filing, the interest starts from April 1, so you receive more interest. However, in case of a belated filing, interest begins only from date of filing, so you end up losing months of interest. And also make your e-verify the return as soon as you file it. Returns must be verified within a certain time and delays can make them invalid. Finally, maintain proper records and store documents that will help you support any claims, deductions and proofs. This can also help avoid delays, notices or rejections of refunds. But who can file ITR today? For most individual taxpayers, including salaried employees, pensioners, NRIs, and those whose accounts don't require an audit, the deadline to file ITR is September 16th. Businesses and professionals whose accounts need to be audited have a slightly different timeline. They must first submit their audit reports by September 30th of this year and then file their ITR by October 31st. Meanwhile, taxpayers who are required to provide a transfer pricing report have until November 30th, 2025 to complete their filing. For more news and updates, stay tuned to FPJ.